Good evening. This is Dwayne Lowry with the Sunday Night Grain Outlook for the DPP Grain Desk on Sunday, September 18th. I'm not sure what we should be talking about tonight. There's not much difference in the weather theme than what we had to talk about on Friday. Weekend precip in the plains could have been a little bit better than expected, but you still probably got 50% of that region that's drier than desired for planting, so there's concerns there. Few concerns globally in terms of wheat, but nothing real significant. Technical conditions are very oversold, certainly due for a bounce, but that argument could have been made any day over the last 5 or 6 days, and the markets continue to suffer price declines. The corn market, bean market, not much additional weekend harvest data to talk about. Some precip moving through the region, but in general, during the next 2 weeks, we've got good harvest weather for early activity. All fields, of course, aren't ready yet, and we don't have a clear yield trend. Certainly not something a guy can be confident in. That being said, considering the pessimism that was around during the entire month of August in terms of towards yield potential, we've had some better than expected yield reports, and I think enough so that it surprised the people that have been in the harvest fields. And I think there's a historical and human nature present perspective and pattern and historical precedent to over anticipate yield declines during the month of August. And I would caution to people to think that we can't see some sort of recovery in yield ideas versus what we saw here over the last couple, 3 weeks. In fact, I would expect that final yields are actually higher than what we've been dealing with here recently. But that's not a very popular opinion. The corn market does not have much here for news. Some will look at weather and say, well, corn will be under pressure because we got good harvest weather ahead. They'll look at price action, say it's been very weak, maybe it'll continue. But in the same token, producers not making any new sales here. The technical trader isn't willing to sell here on weakness. So the only selling that you've got taking place here are people that are being forced out of long positions. Liquidation was fairly active last week, and I think the argument could be made that maybe we've neared an end of near-term liquidation pressures. So I think it's possible that outside markets will start a little on the defensive and be disappointed with the lack of developments in the European economic situation and just general dismal outlook towards global economic activity over the next year or so. But so it's possible that the outside market tone, financial markets could be a little on the defensive. That might put us on the grain trade a little on the defensive early, but I don't see a lot of selling interest here building after we've had such a sharp decline. Technical conditions are poised for some sort of recovery, and somehow I think we'll probably see that try to take place here this week. The bean market, same situation. We don't have a lot here for new news. Market's been weak. We've had declines certainly been more than most people expected or even considered as being possible. There's a lot of discouragement in the trade based on the recent price declines. But I think the short-term technical conditions are not going to encourage anybody to become a seller here. But in the same token, I think you do have conditions that are building selling interest above the market. If we can get a 15-25 cent rally in corn, a 20 to 40 cent rally in beans, these are not unreasonable possibilities, but the point is you have to ask yourself, are we dealing with a situation where we're, a price recovery is a selling opportunity and we've got more time to spend and lower price levels to achieve before we make a seasonal low, or do you have to be under the camp that you feel that this price decline is going to be that seasonal low, that early harvest low, and we don't have fundamental justification for the decline to go lower at this time? I tend to think that the yields are going to be better than people have dialed into the market. I think the financial woes are going to weigh on prices, and I think the technical conditions warrant of a much more prolonged and more thorough and over a broad spectrum of commodities. And I think that type of liquidation pressure is what I consider to be the real threat here. So short term, I think there's some bounce recovery. Longer term, I think we've got lower values to go. Just to give a perspective, in the last couple of weeks, since the last couple of days of August, Dees corn's dropped 87 cents. November beans been down $1.15, and wheat prices are trading under corn. And I think that you'd be hard-pressed to find many that were expecting this break. Very few people traded from the short side. Very little producer selling has taken place in the last 60 days. And I think we've got a situation where We have pent-up selling that will now become available on any types of recovery. But the final analysis is going to be combine yield reports that determine the scope and depth of the price correction event that we're currently unfolding. I tend to think the yields are going to be better than people thought, so I tend to be concerned about downside risk here. But here again, that's not a very popular opinion. So look for some trade maybe on both sides, maybe some initial weakness from financial markets, but overall I would think we're going to be fairly well supported here early this week and see if the market can't put in some sort of recovery. For the DPP Grain Desk, this has been Dwayne Lowry. Thank you.